Welcome to Drill Down Earnings. It's Monday, Thursday. We've got Netflix earnings, and it's a good quarter for this company. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Let's get right into these numbers. The stock is moving up a little bit. Why? Q1 earnings were better than Wall Street expected. Wall Street was looking for $10.5 billion in revenues and $5.66. Instead, they got a little bit better, $10.54 billion in revenues. I guess that's better. The guidance was also good. For the coming quarter, for the second quarter. What we've seen this quarter is less than we've seen before. They used to give us all kinds of subscriber numbers for each geography, and we could figure out revenues per geography as well, so we could figure out revenue per subscriber for each of the different places. They warned us for months, for quarters, that this is not going to be true anymore in 2025, and now we have no subscriber numbers to go by, a lot fewer metrics, but we've still got some insight here. So we saw 13% revenue growth. It was a decent quarter for them. I say anything about double digits is good, but it's less than we've seen. And what they told us during the conference call and in their press release as well was that some price hikes that took place in the US and Canada, what they call UCAN, the US and Canada price hikes took place in the midst of the quarter. So the full effect of those were not in all baked into the first quarter of 2025, and as a result, only 13% revenue growth. But a strong quarter for the company, as I mentioned, $10.543 billion in revenue. Operating income of $3.4 billion, or $3.3 billion, I should say, with a really healthy 31.7% margin. But those are numbers, whatever. What these guys talk about is content, and they had some real content hits in the quarter. Let's talk about a few of them. So Adolescence, and I'll tell you it's the only one of these things that I've seen and I haven't finished it yet, so don't ruin it, no spoilers here. But Adolescence had 124 million views. It was from their UK team. It is a series that is the third most popular thing they've ever done in the English language. So really spectacular results from Adolescence. Like I said, I watched the first, maybe second episode. It's really good. It is shot like an all one shot. It's super cool, kind of like this, but maybe better. If you're wondering if that's number three, what's number one? Well, the number one thing they've ever done was a show that I've never seen before called Season 1. That was the best thing they've ever sold before in terms of viewership ever. And Stranger Things, which I have seen, of course. Fourth season of Stranger Things had 141 million views in the first few days of broadcast. So really impressive. The other thing to look for here is ways that they're really expanding. So we know that they've got some NFL stuff, not in this quarter, of course, because it was first quarter 2025. They had the Christmas game, which is a big deal for Netflix. But WWE. WWE is really big for these guys. There's 52 weeks a year of broadcast. They've had great success with it. They called it out in their press conference or their press release as one of the real big successes for this network as they move into sports instead of wrestling sport. Also, price increases. They don't call them price increases, they call them price adjustments. But the adjustments that they made in large markets, US, UK, Argentina, they say they're doing just what they wanted is with those. And they're gonna raise prices or adjust prices in France. I can't say that in French, but that's in their guidance, so it's not really upside, but nonetheless, those steady price increases, we'll talk about that when we get to the bite, the one number that tells us a whole lot. But when you look at their business, you see really strong, consistent growth. Yes, UCAN, United States and Canada, is the biggest part of that, but consistent growth in Europe, in Latin America, and in APAC. And yes, UCAN, if you look at it just in terms of percentage growth, percentage of revenues, United States and Canada has really hung in there just above 40% for many years now since the pandemic for Netflix. How did the stock react? Well, beating numbers helps. Stock was up about 1%, 2% in after hours trading, settling in about 2% in after hours trading. In the last year, stock's up 59%. Compare that to the S&P, up only 6% now because of this recent sell-off in the market. So really strong results from Netflix. And I think there were questions about what's gonna happen here. What's with this new economy we're looking at, with so many economists predicting a recession, with consumer spending dialing back, just as Netflix is launching a low-cost advertising-supported vehicle. I say it all the time here on the Drill Down Earnings that advertising is the canary in the coal mine of the economy. It's the first thing to go. So what does that mean for Netflix in this, given their limited history in this business? Well, the co-CEO, Greg Peters, in a press conference afterwards, had this to say.
We're paying close attention clearly to the consumer sentiment and where the broader economy is moving. But based on what we are seeing by actually operating the business right now, there's nothing really significant to note. So what are we looking at? Primary metrics and indicators would be our retention, that's stable and strong. We haven't seen any significant changes in plan mix or plan take rate to part of that question. Our most recent price changes have been in line with expectations. Engagement remains strong and healthy. So things generally look stable from that lens. Stepping back, we also take some comfort in the fact that entertainment historically has been pretty resilient in tougher economic times. Netflix specifically also has been generally quite resilient, and we haven't seen any major impacts during those tougher times, albeit, of course, over a much shorter history. And then to the point of the specific question, I think that having the low-cost ads plan in our largest markets also gives us more resilience. And we think that we represent an incredible entertainment value, starting at $7.99 in the US and Canada with that ads plan. It's an accessible price point, and we really do expect the demand for entertainment to remain strong.
So demand for entertainment remaining strong? Yeah, sure, that's a good thing. We'll see if the advertising world does as well for them. It's not a huge part of their guidance going forward. They did not break out advertising as a separate revenue category line, so we can only guess. But they don't seem to think that the current economic conditions are going to change what they see for advertising. We'll believe it when we see it. What's it all mean? What's your big drill on earnings takeaway? What's the one number that tells us a whole lot about Netflix? Well, Netflix Q1 earnings, the really things to, your essential summary, the things to remember, was 13% revenue growth, gave them $10.543 billion in revenues, $2.9 billion in net income. So a really strong quarter, better than the estimates. But I think the one number that tells us a whole lot, and I'm not going to give you a range of numbers, I've never done this before, but the one number that tells us a whole lot about Netflix is that all of their major places where they do business, US and Canada, Europe, Latin America, APAC, all saw growth between 2% and 4% on a year-over-year basis, or sequential basis in the last quarter. And what that shows me is this company is very carefully adjusting the dials on what they charge their customers to grow steadily across all those markets while they sink a lot of cash into content. All right, thanks for checking out Drill Down Earnings. Check us out on all the socials, on X, at Cory TV. You can find me, and also on TikTok, Instagram, and YouTube, at Drill Down Pod. And please look for us in your comments below. We'll keep an eye on it.